What's going on, guys? Mortgage and real estate broker Michael Watkins here again, NMLS number 2096424. And I don't know if you guys have seen the latest article going around talking about how much more expensive it is now to purchase a home than it is to rent a home. I'm going to play this video for you to give you some context and see exactly what they're talking about.
The average monthly mortgage payment is now 52% higher than the average monthly rent payment, according to commercial real estate firm CBRE. The Wall Street Journal found that the ratio hasn't been this out of whack since ahead of the 2008 housing crisis. In 2006, mortgage premiums peaked at 33%. Generally, mortgage payments and rent payments are about the same month to month. Owners, however, tend to put more cash into their homes because of expenses like repairs and renovations. High mortgage payments can be attributed to today's high borrowing costs. Last week, interest on a 30-year benchmark home loan peaked at 8%. At this rate, if an American were to take out a 30-year home loan on a home that's $410,200, which is the average cost of a home in the US, and put down a 10% down payment, they still will pay about $3,000 a month. That's 60% more than they would have paid in 2020. According to real estate brokerage Redfin, there are just 4 cities in the US where it costs more to rent rather than buy. Those cities are Detroit, Philadelphia, Cleveland, and Houston.
Okay, so now that you've seen that video, you see that this is mostly attributable to the fact that we have higher interest rates right now, right? You are going to pay more on a mortgage payment for the same home because of higher interest rates. The other reason is the fact that home prices are not static. The real estate market is constantly appreciating. A home that cost $300,000 or $350,000 2 years ago will not cost the same amount of money today. So unfortunately, there are going to be people who are priced out of the market. I've had a few clients this year alone who qualified for a certain mortgage payment, and now because of rising interest rates, they simply cannot afford to buy the same home that they were looking at just 6 months ago. The bank isn't going to approve them for a mortgage payment that's higher than what they can afford, especially our market here in South Florida, right? There's always going to be a segment of the population who they just will not be able to afford a home in a certain market. That was true back in 2020. Back when rates were about 2%, there was still a segment of folks that were not able to afford a home, whether it be because of their credit or they didn't make enough income or they didn't have the down payment. What I'm talking about are the folks who meet these 3 criteria. They have a credit score that's 650 or higher. They make $60,000 or $70,000 per year or more, and they have $20,000 or $25,000 plus that they can put towards a down payment. If you are in that category, you are a perfect candidate for home ownership, and you should not be following the narrative that somehow you should wait and you shouldn't buy a home if you can afford it and continue to pay someone else's mortgage. Because listen, let's be clear here. If you are renting, that is precisely what you're doing. You're paying a mortgage anyways. It's just not yours. And if given a choice between the two, I would rather you pay your own mortgage on a home that you own. If you're finding value in this content, don't forget to like, share, and subscribe. So let me give you a couple of reasons why, if given the opportunity, you should be purchasing your own home as opposed to renting. Number one is the opportunity cost, right? We talked about this going back to 2020. Homes that were $300,000 or $350,000 back in 2020, those homes now are $450,000, $500,000. Guess what you're gonna pay for a home in 2 years that's $400,000 now? You're probably going to end up paying $500,000 or $550,000 for the same home. So that's number one. It's missing out not only on being able to purchase a home now that's less versus 2 years in the future, but number two, missed opportunity on equity, right? On appreciation in value of that home. So in the future, not only are you going to have to pay more for a home, but you missed out on the opportunity to gain $100,000, $150,000 in equity 2 or 3 years from now. I could go on and on about the intangibles here. People talk about the financial part of it, which is important, obviously, right? But the intangibles of owning your own home, right? Not having to deal with someone telling you that they sold the property and you need to get out. What is it worth not having a landlord come to you and say, hey, I'm raising the rent from $3,000 to $3,500 when you renew this lease? You don't have an asset that you can then pass on to the younger generation, your children, that they can then pass on to their children, etc. And another consideration is when rates drop, let's say in a year, maybe 2 years from now, what do you think is going to happen to home prices? It's going to skyrocket, right? Home prices are going to go up, right? Because everyone's going to be selling their home. There are going to be buyers left and right, and the market's going to be like it was back in early 2021 when people were paying $20,000, $30,000, $50,000 over asking price so they can beat the last person who made an offer out on the same home, right? You're going to have a dozen people trying to buy the same house, and the market's going to be absolutely crazy. Take a look at this comment I came across on the screen here, where this person is essentially saying, well, if interest rates go up and your house depreciates, you're going to be upside down and you can't afford it. You're in trouble. That is not a mindset to have. It's like me saying, you know what? I'm not going to play soccer anymore because I could get tackled and someone could break my foot. Or I'm not going to get in my car and drive to work because I could get hit by a bus. Could it happen? Sure, it could happen. But that's not our approach to life. If we follow this advice, we would never become homeowners. It's ridiculous. Here's another comment from a gentleman who said, hey, back when I bought a house, I paid 15% interest, right? I bit the bullet and I did what I needed to do because he understands that homeownership has way more benefits than renting a home that is not yours and paying someone else's mortgage. And here's the truth about searching for a home shopping. It's not pretty. I do this every single day, guys. It takes discipline. It takes persistence. It takes grit, right? That's the ugly truth about home shopping and going out every day looking at 15, 20 different homes a week, going through the process of making an offer on a property that you lose to someone else, right? Going through that process of having to do that all over again because you made an offer of $5,000 over the asking price and somebody beat you by offering $20,000 over the asking price and having to repeat that process for a month, 2 months, 3 months, maybe more. Another factor that gets overlooked that could mitigate some of the costs of purchasing a home is negotiating a buy down of the interest rate. Right? And a lot of times you can get the funds for that from the seller, right? You can go to the seller and not only negotiate some of your closing costs, but then you could specifically ask if the seller is willing to help you buy down the rate on your mortgage to then decrease what your mortgage payment would be. Not only do you have, options like, home buyer grants. For example, the Hometown Heroes grant, I actually just did a deal with a Hometown Heroes grant a few months ago. So there are factors that will help to reduce the costs of the interest rate. You can get closing costs back from the seller, etc., to help with the affordability of purchasing the home. Another thing people say regularly is, well, you're in real estate, you're a real estate broker, you're a mortgage broker, you're just trying to earn a commission, right? All you want to do is sell a house so you can make money. And nothing could be further from the truth. Here's the thing. For me, creating homeowners is personal because I know many, many years ago when I was, 23, I think I was when I bought my first home, my life changed. Purchasing a home is one of those milestones in life that changes your life, right? Financially, family-wise, and all the rest of it. And it's also one of the fastest pathways to wealth, right? Most people acquire wealth through properties that they own, through real estate. Helping people to own homes is a benefit to the entire community, right? Property taxes are what pay for schools, help pay for hospitals, build the infrastructure of your community. That's done through property taxes. It's what pays for, law enforcement, fire departments, etc. So everyone benefits. when there are more homeowners. And that's the reason I do this. I want people to realize that they have a better option in homeownership than if they were throwing money away on rent. All right, guys, so that's the main takeaway here. If you have questions, don't hesitate to reach out to me. I'll talk to you soon.